We're going to be talking about a dividend stock that has huge upside potential. A lot of investors are buying in right now, and this is a REIT. I personally do not own this stock at the current time, and it's not because I don't believe it's a good stock. I just don't know if it's something that fits into my portfolio, but it could definitely potentially fit in your portfolio, while many analysts are saying this stock is a strong buy. So before I go any further, if you do enjoy this type of content, make sure to subscribe, turn on post notifications, yada yada, all that good stuff. Let's go ahead and get straight into it. So the stock we're looking at is iipr. Now you might be sitting there and be like, this stock is down 10.5% over the past year. Why would I want to buy? And this is potentially a great time to buy this dividend stock on the dip. Just literally looking over the past 5 years, it's definitely been a really good returner. 967% returns since 2017 alone. There's a lot of upside potential, and this is a REIT. Year to date, it's down 22%. You're buying on a discount. When you relatively think about it, now you don't just want to go around buying all stocks that are falling right now, because stocks don't just go up. But when you do the analysis, this one does have potential to definitely recover back up to its high levels of around $286 a share. You can see right here, this stock is in the cannabis industry, and a lot of cannabis stocks are down. Right here, down 87%, down 71%, 15, 9%, all over the past year. So let's go ahead and talk about this stock. They have a price to FFO of 30.6. They have a market cap of roughly 4.9 to 4.6 billion. It kind of varies just because of how volatile it is right now. So $4.7 billion around. Looking on their dividends, they have really solid dividends, except we'll talk about the payout ratio in a minute. They have a dividend growth record of 4 years. A yield, it's kind of whack on Seeking Alpha. Because if you go right here, there is a little bit of a mistake. Their dividend history, if I go right here, it'll tell me that they have a 0.21% yield, and it'll say $1.50, and it says this was a 10-cent payment. However, I was like, that doesn't seem right. So I went to the company's website, and the entire date, payable January 14th of 2022, this right here, payable, that's when 12/29, that was like the ex-dividend declaration date and all these different things. They're talking about this date right here. They said it was 10 cents, when in reality it is $1.50. So the stock's overall dividend yield is roughly 3.11%, which is a really, really good dividend yield. Let's go ahead and talk about what analysts and kind of news is saying about what this company. In 10 years, you'll wish you bought more innovative industrial properties. Who is innovative industrial properties? Now, this company is self-advised, and they pretty much acquisition, ownership, and management of specialized properties to be leased to experienced state-licensed operators for regulated medical use cannabis facilities. So pretty much what they do is people who grow cannabis, sell cannabis, all these different things, they are their landlord. And it's pretty simple. You can see this is kind of what their portfolio looks like. If you just go right here, you'll see they have a ton of different areas, especially in the northeast and kind of the southwest. Those are their two hotspots, so you can see a lot of areas aren't even filled up. That leaves them a lot of room for growth. There's just some of their people, like Green Thumb, PharmaCann, Parallel, different names like this, and they have a lot of upside potential to continue to expand. The more they expand, the more they grow. Now looking at this, 14 states have yet to legalize marijuana, medical marijuana at least, and so there's major room for expansion, which is really good stuff to see. Looking even further, down 15%. Is this stock a buy? Their FFO, their funds from operations, they continue to rise, so as well as their dividend. You can see right there. It's all looking really solid. Looking even further, this guy says it's definitely a buy, predicting 38% growth year over year for revenue in 2022. But although this industry is a tough kind of game to play, they're the top landlord. They're known as the landlord of cannabis, and it's an innovative player. But it says it's for more risk-tolerant investors. So if you're kind of not trying to play any risk, it means you can tell it's most likely for risk-innovative investors, as the stock is down 10% over the past year alone. So it's going to be more risky, but I do believe that long-term this could play out, especially if cannabis starts to get more legalized and kind of more legal factors benefit this stock. And they bought 29 facilities in the last year, showing more expansion growth. And I would say the cannabis sector, it's going to put an effect on the stock, but on the company, I would say a very important factor is growth. because it's growth is that number one important thing. Because if a company is making $10 million, they can still most likely pay their rent to iipr, which is important. But if they're making $100 million, maybe they can raise their rent a little bit and different things like that, and potentially pick up further client lock-ins. But what really matters is expansion rather than just like their customers making more money. So we need expansion in the sense that more stores open up in the cannabis sector. Now looking on Morningstar, what we're going to see right here is they have a fair value of roughly $205, which is really good stuff. It says they're trading at about a 6% discount, which is really, really good. Looking even further, let's go ahead and talk about this. They have a PE of roughly 44, and we're going to talk about the earnings because their payout ratio is kind of whack right now. But they have a forward dividend of about $6, which is really good, $6 a share. Shares outstanding is about 25.62 million. They have good profit margins, 58% profit margin, 65% operating margin, really good revenue growth, really good earnings growth. So we're seeing all of these numbers increasing, and earnings growth is going to be a massive factor in getting this payout ratio a little bit lower. Now we know they're a REIT, so it is important that they have to pay at least 90% of their taxable income and different things like that. But I want to show you kind of some statements on different things in their financials. Their assets are increasing incredibly. They have pretty low liabilities, so they have a lot of equity whenever their people are pretty much just in the company, if you're buying the company at all. Dividends in excess of earnings is about 65 million, and that is for the 9 months. And for the entire year, we'll look right here. It is right here. Dividends paid to common stockholders about 94.9 million, preferred another million. So about 95 million in total payout, and their net income is roughly 85 million. So it's not the best, but their net cash provided by operating activities is 141 million, which is really good. We really like to see the cash is at least performing good enough to where they can pay the dividend. And that is very, very important, especially when it just comes to investing in a company. You want to make sure they're in good financial standing. Revenues are increasing year over year, quarter over quarter. That's really good. Net income doing really well. And that is also, by the way, net income for the 9 months ended. For the whole year, it's going to be even higher. So that's really good thing to see. You always want to see a company continuing to grow and still not even finishing out the entire year's numbers. Looking on just kind of an investor presentation, the company was founded in only 2016, so they definitely still have a lot of potential. They're on the New York Stock Exchange. They have a lot of money invested right now. 100% of their properties are leased, 73 properties in 18 different states. They have so much upside potential for growth, and that's what we're kind of seeing right here is not only share price growth can happen, but we definitely want to see dividend growth as well, which is going to be a big factor. Just look how big the revenues have been growing since 2018. Net income as well, been growing at incredible rates. Analysts are expecting good things for this company, from $4.65 a share in 2021 to $6.31 in 2022, $203 million in revenue in 2021 to $280 million in 2022. That's 37% growth, guys. That's a massive growth jump for a company, especially a REIT. Price targets analysts 3 strong buy, 51% upside on the stock, and institutions are picking up $874 million and only selling $403 million. So institutions, big money's buying. They know what to say. Follow the money. But everybody, that's going to wrap it up for this video. So if you enjoyed it, make sure to subscribe to my channel. Turn on post notifications so you don't miss out on any future videos. Check out M1 Finance if you haven't already. If you sign up using the link in the description or link in pinned comment down below that says M1 Finance, if you sign up, make an account, deposit $100, you'll get a free $50. It's free money out there. Make sure to check it out because it's incredible stuff. You can take that $50 out and do whatever you want with it. But thank you for making it. If you enjoy dividend stock investing and all that good stuff, subscribe, turn on post notifications so you don't miss out on any future videos. Like I said, again, thank you for making it to the end of this one, and I will see you at the next video.